and welcome to the Morningstar series Why Should I Invest With You? I'm Emma Wall and I'm joined today by Chris Morrison, manager of the GAM UK Diversified Fund. Hi Chris.
Hello.
So we're here today to talk about the UK. It's looking a little better this week than it has done in recent weeks, but if we look back over the last month, there has been quite a lot of volatility. How concerned have you been about that?
Yeah, no doubt. It's a huge amount of volatility in the wider market. You look at Japan yesterday and it was its 8th biggest move of all time up, and today it's down. We are long-term investors, so we try and distance ourselves as much as we can from sort of short-term volatility, but I think you have to acknowledge what's going on outside, so in China specifically, and how that impacts the UK. To a degree, you could say we're protected in terms of, well, we actually export more to Belgium than we do to China. But on the flip side, we have a skew towards basic materials and energy. So we are going to be impacted by China, and so it's important to have a view on it at least.
Because 70% of the revenues of the FTSE 100 come from outside of the UK, and that's why, of course, it is a truly global market, not looking just at China, but looking at Europe as well, which is on more stable ground than it has been. Is that a concern for you as a UK investor? Yeah,
and that's clearly the biggest export market for, from a macro point of view. And the macro itself in the UK looks to be holding up. GDP is good, unemployment's low, inflation's low, real wages are coming through as well. But like you say, it's that trade balance which is unhealthy in a sense. Exports are down and imports are up. So that is a concern indeed. And on top of that, the growth looks relatively unbalanced in the sense that it's coming from the consumer side as well. So domestic or the consumer has more money in their pocket, so spending more. But actually the companies exporting aren't doing quite so well. So it is something you have to be aware of, indeed.
Taking all those things into consideration, the threat from China, the wobbly Europe, but the strong macro story in the UK, are there certain companies or certain sectors which lend themselves better to that sort of smorgasbord? Yeah,
the way we go about selecting stocks, we typically have a sort of value recovery bias to the fund. So we move away from those popular areas. And it's interesting to see now that the defensives and the growthier names have done very, very well, really since the crisis. And on the flip side of that, the value recovery hasn't done so well since the crisis. And maybe you're getting a bit of a washing out of the system in the sense that those value recovery names might start to do better now, which is looking quite interesting. And also, I guess, linked in with that is the large cap, small cap. The small mid caps have outperformed the large cap for over a decade now, and the large caps have really lagged. And those are the guys who do export to Europe and have been struggling in that side of things. Still paying good yields, although some of those are now questionable with commodity moves. And maybe that is shifting. That sentiment is shifting. If you do get some big moves within the basic materials and dividend cuts and other things going on, which we're starting to see with Glencore and Anglos as being very aggressive in cutting its debt, then maybe there is a shift towards large cap.
Chris, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.